Welcome to the Drill Down, in-depth answers to oilfield questions. I'm John Spears.
And I'm Richard Spears.
And what do we say? We're the best good show?
We're the best short
oilfield podcast in the business. Yeah. Well, we'll see if we can live up to that today. Rich, I thought we might talk about the fact that in the news in recent days has been the discussion taking place within OPEC and OPEC Plus about reducing their production quota. Since the late days of 2020, almost 2 years now, they've been targeting production quotas spread amongst their membership as a way to restore oil prices, right?
And this is OPEC Plus, so you are adding in.
Oh, you've got Russia, and you've got, I think, 20 other small producers, small exporters. So besides the usual lineup of OPEC members, right?
And they're kind of goosed right now that that the world might be or is entering into a recession. And so part of this is they're trying to do their part to not flood the world with oil.
Yeah, so for the first time in 24 months, their production quota target may actually be lower. They've been raising it slowly as they see demand recovering and whatnot. And but now they're getting to the point where, because of these recession worries, and the fact that oil prices were not too recently, but $78 here in the U.S.
Yeah.
So there's and if you look at the futures curve, that has tended to tilt down as well. So there's the thought, it would appear, that low oil prices prices have dropped to the point where OPEC has now said, let us restrain production in order to lift prices, right?
Because do you have a guess about what sort of price they're trying to defend?
That's been the question, right? In the past years, so when they got started back in 2020, the price of oil the day they got together was, I think, $30 or $40, right? And I think at the time they were targeting, let's get it up to 60 or 70, basically double the price. And, we'll get there someday and that'll be good. But since then, of course, prices have skyrocketed thanks to the conflict going on in the Ukraine. But my guess would be that $60, $70 price is now probably a $70, $80 price, maybe a $70, $90 price. You have to think about OPEC pricing and target prices, not so much in what's a profitable number, but really what do they need to support their governments, right? I mean, that's so much of what the revenues that the host companies receive goes for, really. So that really represents their break even.
So that's a floor of 70 to 80, and there's got to be an upper boundary, because this is a boundary value equation that it looks like 120 or 130 is too high.
Right. Yeah.
So would you say 100?
Yeah, that's a good point, because earlier this year, early part of summer, June or so, about when oil prices, Brent was 120 almost, right? And that's when OPEC met and said we need to increase the rate at which we're adding barrels to the market, and to bring prices down a little bit. Now, what's fascinating in all this exercise is the fact, of course, that there's a production quota, and then there's actually what they're delivering. And
this is the part that you argue about all the time, because my position is they may not be able to hit.
Oh, they're nowhere near it. So
it's not by voluntary not hit. It's like can't hit.
Can't hit. Yes, absolutely. So, for example, in July, OPEC Plus output in aggregate,
July,
2.9 million barrels a day below what their production quota was. Right.
Oh, that was July.
That was July.
So what about August?
August was 3.6 million barrels.
Ooh, that's below. Going in a negative.
Well, yeah. I mean, they raised their production quota, but they didn't lift production. And so the deficit increased even more. Right?
So it's kind of like, I don't care what the amount is that I've said. I'm flat out. Well, so what's September then?
Well, the numbers aren't in for September.
Well, just make one up.
It can't be any better. So there raises some interesting points to discuss and shed a little bit of light on. So the deficit in terms of their, the degree to which they're falling below their target is not due to Russia, losing production. In fact, if you look at Russian oil production.
Well, let's look at Russia.
So Q4 of 2021, before the conflict began. Okay, 11.2 million barrels a day.
11.2 million Q4 a year ago.
Q4 this year, right now, in fact, 10.9 million barrels a day.
That's
so they're down 300,000 barrels a day.
That's the same number.
It's the same number. Now, next year, and this is where it gets interesting, forecast is that come Q4 of 2023, Russian oil production will be 9.2 million barrels a day. So that's a 1.7 million barrel a day drop, right?
15% decline.
Huge decline. Not sure why that's expected.
So this is not you saying, I expect it. This is somebody else out there who's looking at it.
For example, these numbers come from the EIA as their forecast of oil production and global production, right? OPEC, okay, OPEC Q4 of last year, 27.7 million barrels a day. So this is crude oil.
Is this OPEC?
Just OPEC.
No Russia.
No Russia, yeah.
Okay.
Q4 of this year, 28.9.
Up a million.
A million too, yeah.
Okay.
Their production quota is up about 2 million. No, but over that time. But so you see,
so they did actually, run the squirrels faster
a little bit, but nowhere near target.
Didn't hit the target. Okay.
Next year's number, fourth quarter, 28.9. No change.
Oh,
what does that tell you?
And these are smart people looking in, going, "This is what we think."
Yeah, right. We hope they're smart. I mean, that's But anyway, that's so really no increase in OPEC production. And this is before any decision is taken regarding reducing that magical quota, right? So OPEC, as we know it, the constituent members of OPEC basically expected to run flat out at best, right, over the next 12 months.
So are they just readjusting their quota to hit what they can actually do?
Or maybe bring it back more in line, the reality factor. So I think the point is this. You could shrink the quota. Nobody changes production, right? It doesn't really have a real world effect. It just sort of headline news kind of thing. But I suspect if they were to lower the production quota, I mean, the reason OPEC output has risen over the past year is because Saudi has gone up. And so if they shrink the quota, then I think Saudi pulls back in terms of what it produces. I mean, so I think there would be a real world effect of reducing this production quota, even though it's been kind of an imaginary target that no one's been able to hit. But the Saudis, have been the ones dialing up their output over the past year. And I think they're the only ones who would voluntarily dial down their production.
You know what this kind of reminds me of?
Let's hear it.
You remember back in the 80s when you and I shared ownership of a what?
A pump truck, among other. Well, no, wait a minute. I bet you're talking about the Fiat.
The Fiat Spider, the red Fiat Spider, 1974 red Fiat Spider.
Yes. So the theory was that ran. Okay, I guess
that's right. Yeah. When it ran, it had a speedometer on it that went up to 140 miles per hour, but the car really could go 62.
I was about to say those last 80 were just imaginary. Yeah.
And so this is what this actually reminds me of. I've got a quota here, which is something here, but that doesn't actually mean that I can
get anywhere near it. Yeah, right. So now again, this discussion around reducing production quotas and what it might mean to actual production, I think, is consistent with OPEC and OPEC Plus and their efforts to support prices by targeting inventory levels. Right, that's been their claim to fame for any number of years now. Really, is what are global inventories doing? And can we keep those in a normal range so that oil prices bounce around in a range that we find acceptable? So, and maybe it's this $80 to $100 range, something like that. So,
I think we know what inventories are.
We know what inventories are in the industrial world. OECD numbers are pretty much back to normal right now. And I say that only because remember what have we pulled? 165 million barrels out of strategic petroleum reserves here in the U.S. And guess what? Commercial oil reserves have gone up by about 165 million.
So we take it out of one bucket, we put it in another bucket.
But again, it's just the commercial bucket that counts from a pricing standpoint. So, but you can imagine if you're worried about recession that pretty soon inventories become overfull and now prices tank. So I think this discussion about quotas and so forth are meaningful because, again, OPEC is looking at the inventory numbers as to give them some guidance as to how fast they need to open or close that master valve. And
it looks like we'll be sending Chris Ingram out to Cushing again to go tap on the tanks. It sounds empty. Sounds full. That's how we measure stuff. I don't know how anybody else does it.
Yeah. So the other thing that's, of course, the other big wild card, besides recession, is really what will happen to Russian oil production, right? I mean, there's these numbers that suggest that the forecast that it's going to fall by over 1.5 million barrels a day year over year in the coming year, and even though it's hardly changed. And so it's hard for me to imagine what might drive that at this point.
Mr. Putin is he's an evil genius, but you know what he's done? Yeah. He has just orchestrated via a war one of the greatest wealth transfers in Russian history. Other than but because we all sold our jointly owned oilfield service companies in Russia to our Russian partners for $1, and now Russia owns all of these oil field assets and probably every other industry too.
Yeah. Now, whether they end up being stranded assets is the question. But I see.
But I mean, they got a drill bit plant. They've got a frac spread. They've got drilling rigs that they didn't have before, and they're fully owned by the Russians.
So the interesting point there, of course, is that many of those decisions that businesses took weren't really forced into those decisions by sanctions, right? A lot of companies looked at it and said, the atmospherics of us continuing to do business in Russia are bad for the company, so we're going to get out. And so they walked away.
And on the boards where I said it was far more harsh than that. We didn't really have a choice. We had to get out.
Right.
We had to close down. So
right.
Here you go.
The question, given the state of affairs over there, we're not geopolitical guys, but if you look at the status of things, there does exist the possibility that sanctions on Russia, particularly on the energy sector, could be extended. Right, most of the sanctions that have been put in place with regard to upstream operations have been about Arctic operations, frontier developments, and the like. And so no technology going to those, no dollars going into those kind of things. But a lot of conventional operations have yet to be subject to sanctions. A number of Western companies have opted out of those markets, but they haven't officially been sanctioned yet. So there could be further sanctions put on that. And to that, what I'm looking for there is regards electric submersible pumps, one of your favorite topics, right?
That's right.
So Russia has, by most counts, around 200,000 producing oil wells. About a half of them are on ESP pumps. Okay. ESP pumps over in Russia last about 3 years. So you need to replace a pump every third year, right? So there's 40,000 new submersible pumps that need to be built for the purpose of replacing ones that have gone south on you, right? And a lot of the technology going into those pumps comes from outside Russia. So the manufacturers take place in Russia.
There's a bunch of
componentry.
Yeah.
So that's one area that you say, man, that would be one that, depending upon how things go, if pumps end up being a sanctioned item, right, then all of a sudden you could, so if half your wells in Russia are ESP pumps, Russia's producing 10 million barrels a day now, something like that. 6 million barrels a day from through ESPs. A third of that, 2 million barrels a day, are on wells that need replaced pumps. You can begin to see how the numbers might sort out to a fairly rapid decline in Russian output should the geopolitical situation end up.
I'm gonna say that as long as China is a willing trading partner with the Russians, that they're gonna not have a problem with ESP parts coming in. And so I'm not going to agree with you on that one. But there could be other things that hit far worse. But you're right. ESPs, if they stutter step at all,
that's going to be a big issue.
There's a million barrels a day.
Yep. So that's the kind of thing that I think we all need to kind of keep in mind, and because that news would clearly have an impact in where the bigger supply situation goes and what that might mean for oil prices. I just think, though, that in a market that's as tight as it is today, with inventories at normal levels, with almost all producers basically flat out, even with worries about a recession and the possibility that demand might soften a little bit, it's within the capability of the major exporters, were they to reduce production, that it would help firm up prices, keep them from, going through a total, drop as we have seen in the past, right?
The $30 days.
Yeah, right, exactly. So, and especially given the fact that U.S. output is growing, but growing at moderate levels. So, all these things I think we need to keep in mind. Hopefully, the next few weeks will give us a little bit more guidance, because I think we're getting to the point where operators are going to have to choose. Here's the price we're going to assume, and where we set our budgets, and how much we want to grow production next year. And these kind of things I think will be key to that boardroom level discussion.
I'm long oilfield services. Still am.
In all things, we are, yes. So, all right. Well, thanks so much for listening to us today. This has been the Drill Down Show. I'm John Spears.
And I'm Richard Spears.